Good evening. I'm not sure if everyone can hear, but this is slightly odd because I'm now talking to myself, but I know that there's a few people listening, so please bear with me if I seem a little bit odd, but this is very unnatural for me. I hope everyone's well. Thanks for joining us. For those people that are live, for anybody that's going to be watching this later, hopefully you'll find this useful. The idea for this meeting this way is just because we've got quite a lot of information we wanted to give to you, and we felt that it was probably easier to do so where, as you can see, you can type questions as you're going along. But what we would like to try and do is, if you could sort of, as you're going along, please feel free to ask questions. But if we can address the questions at the end, so if you can sort of leave concise questioning on the feed, and then I'll address any questions you have towards the end. So the purpose of today's call is to give you an update on what's going on with the company, how things are progressing along, give you some background of some of the good things that are going on, some of the challenges we've had, and hopefully answer the queries and questions you might have. So to start with, we're going to do the updates of the company progress, and where we're at with products and various bits and pieces like that. So since we had the meetings earlier in the year, we've obviously sent around an update. We want to look forward, not back, but we've had a few challenges having to deal with some of the past sort of issues. Predominantly, our biggest challenge has been just sort of getting control, understanding where the company's at, what we needed to do, get the account sorted, etc., interact with everyone as we said we would, but at the same time, we probably made mistakes with a few sort of complaints with regards to how much we haven't been in touch. We've wanted to be in touch as much as we can, but at the same time, we don't want to be in touch just for the sake of being in touch. So, as I mentioned in the previous sort of updates, and also in the meetings in January, our intention is to report to you on a quarterly basis, and we're trying to find innovative ways to do that, this being one of them, so that you can understand what's going on, because some of the stuff is quite technical. It's very difficult to put it in writing because half the time it's a lot of information to try and get down in writing, and it's the same as anything. It's very difficult to sometimes convey everything. So what we're going to try and do is find ways to keep you up to date as much as possible, but not overload you with sort of bits and pieces. So today is going to be about trying to explain where we're at with the company with regards to products and some of the things that we've found, some of the challenges that we've had, and how we've gone about trying to find solutions to it. So overall, the first half of the year has been very positive, I think, in many ways. We've looked at the business as a whole, which up to date has been probably run in a way where for the last 2 years has been run as a research company. So it's very much been the case that the company's been trying to create product. I've always started the business on the basis of how do you get a customer first and then work our way back. So we've sort of brought a lot of that into the mix of trying to think, how do we get what we have into a business? So we've looked at all the things that we have, things that we could sell right now, things that we have been developing. Obviously, this conversation is aimed at both companies, Wazon and iStein, and I'll come back to you in a minute with regards to what our plans are for the companies. But we've looked at the products that we have in both entities, how they overlap, and we came to the conclusion that basically we have two companies that are doing the same thing. Wazon more and more has started to use AI as part of what it does. It never started out that life doing that, but it's become a bit like this. And as such, we've sort of looked at ways of how to interact between the two companies and use iStein to do things that would be useful for Wazon and vice versa. So we've effectively ended up in a scenario where over the last 6 months, we've developed some directions for the companies, and some directions for products, some of which are ready to go to market right now, and some of which have been reviewed to the point where we found ways to get them to market a lot cheaper than what the original plans were. So what I'm going to do is address what products we have, and I'm going to do it in a universal fashion rather than going from one to the next to the next. I'm just going to tell you what we have and then explain our plans of what to do with them. So currently we have what everybody knows as being WASON, a media search format. There's been some law changes in Europe where it's very difficult to report to the or media press clippings. So people like Google are now they're even struggling to report media reports because it's a breach of copyright. So we've actually now focusing very much on what we're very good at, which is finding the spoken word quicker than anyone else. We had a very long board meeting about a month and a half, 2 months ago in Spain for 2 days. And in that meeting, the concept was to work out what we were as a business. So we decided that WASON's key factor of what it could do is it can find what someone said quicker than anyone else. Doing that in the web, it can do, but it's not that unique. Doing it on the radio and the TV and other things that we're working on, it is unique. And that's what we're really focusing on. So we very much honed it down to the fact that we are targeting the radio and the television and the spoken word and how quickly we can gain that information. Now, we've explored a number of different new ways of doing that. Originally, satellite was the only way to do that. There are a number of different factors now where we can use web-based content for doing the same thing. And our sort of methods for doing that have slightly adjusted to the point where we believe we can get WASON to market for about a third, possibly less, maybe even a quarter of the original estimates that we were working on about a year ago. So that's made it a lot more targetable to getting it live. Now, I'll speak about that a bit further in a minute. Two of the spin-offs that came out of the WASON development was Touchword, which is obviously built into it. So we're working on a demo at the moment, which is very nearly finished. And the idea is to market this to businesses for the purposes of speed of search. We've already spoken to a few people, and there's definitely an interest there. We're just trying to work on actually creating it as a brand and a product in its own way. So it'll have its own website, it'll have its own brochure, and it will have the means to buy it as a product, if you like. And that's ready to go, and we intend to start selling it pretty much now. I'll explain about the resources and the issues we have with regards to marketing products in a moment. But the second product that we have that is live and ready to go is a product that I briefly talked about in January, which is called Read the Radio. And what we've done with the business is we're looking at how to focus it and create it into a method where it targets certain things. So one of the angles that we're targeting is to look at how we can improve people's lives with it. So if, for example, somebody has a disability, how can we use AI? How can we use some of the things that we have to improve it? And the first one of those is giving people that have got hard of hearing to be able to read the radio. Now, that gives radio stations the ability to target a market that they don't currently have any control over. They can advertise to them. And another factor is by documenting the radio into writing at the point of delivery, you can take that content, feed it into a website, and actually use that as unique data that actually would work for search engines. You become more relevant. You're actually delivering all of what you talk about as part of your web presence, and that will actually offer a service as well. So we have about 2 or 3 products that are being put together and created that will be based around documenting the radio at the point of speech, and we have that ready to go as well. So we actually have a meeting planned with a national radio station in about a week or 2 time, and ultimately we will see from that their reaction to it when we do it. We're also targeting disability societies that are targeted towards the hard of hearing to see if they will look at it and help us with the sort of the marketing process of it and so on and so forth. Whilst developing that, we've also been working on a concept for the speech to text, basically being used to replace stenographers on subtitles. Now, we've worked out that a 24-hour service paying about £10 an hour it actually costs about between £300,000 and £400,000 a year for one channel to be monitored 24 hours a day, with somebody, one person, being paid £10 an hour to actually keep typing that. So we believe that there's a big cost-saving exercise for subtitles by using speech to text and the sort of service that we are able to deliver within the WAS format and the Read the Radio thing that we've worked on. So that's not quite complete yet. We're still testing on that, but that's close second to Read the Radio with regards to being finished. So those two are sort of one in the same, but ultimately actually have about 3 or 4 spin-off products off the back of it. We've looked at ways to generate revenue, and something that I've been working on separately from iStein and Wazon. I've actually partnered up with a company that have got a unique security, data security solution that actually, the simple way of explaining it is they've found the way to make data invisible. So it eliminates the ability to hack into data. Now, we as a company to date have only worked on product that we've developed, or tried to work on product that we've developed. And from my point of view, we need to work on product that we have the ability to make money from, as well as things that we can develop. Now, what I've managed to secure is the rights for us to market to the AI market, the ability to not hack into entities and bits and pieces that are using it. Now, ultimately, with the AI space, you have a huge issue with regards to the security over AI. It's a huge talking point. How do you control AI, for example? Now, with this, we will have the ability. So, for example, a driverless car is all well and good, but if someone hacks into your car and drives you into a brick wall, it's not much use. So having the ability to sell a product that could or will eliminate that problem gives us a huge space within the AI market to go out as an AI company with a security tool that will be highly desired. And again, it's a revenue stream thing that we are in the ability to sell right now. It's very profitable. And again, gives the ability to start generating revenue streams. One of the things I'm keen to do with the business is to get us into a position where ultimately we don't have to rely upon investment money to keep the business ticking along. That's been part of the problem to date, and it's something that we're working very hard on eliminating going forward. Now, obviously, the two sort of big things that we have is Wazon, the media search engine, which is, as I say, very focused now to the spoken word on the radio and the television. That we believe we can deliver for probably somewhere between $8 and $12 million. Previous to net recently, we were looking at something like a $30 million requirement to actually get it live. Bringing it under £10 million gives us a number of advantages, some of which I'll explain further in this call. But ultimately, it's brought it into a level that isn't unachievable to find the money for in hopefully in the short-term future. I'll come back to that in a moment. Finally, the other product that we have. Sorry, I'm just looking at the questions as we go along. I'll try not to get distracted by the questions. I will answer them at the end, so please feel free to type them anytime you like, but I won't be answering them until the end. The final one is we have a thing that we now call X3, which is a modular system for training AI up to 3 times faster than the current market leader. So we have been working very hard on that. We've been doing some reviews on that. We've managed to get that down in cost as well, and in time for delivery, to the point where if we can get a certain level of investment into the company, and I'll come back to that in a moment, we believe that we have something that within inside of 12 months of starting, we could arguably be turning over somewhere between $30 and $50 million in turnover, and that would be pretty much clear profit, because that wouldn't entail a huge revenue stream of cost for running, but would be an awful lot of cost or revenue straight into the business. But I'll explain about figures and bits and pieces in a moment. That effectively gives us the products. Now, if you have any questions on the products, please obviously feel free to ask questions. I'll attempt to answer them. If you have any great detailed questions, it's probably going to be very difficult to explain it all on this particular call because it's lacking interaction, but I'm happy to do one-on-one calls with anybody after this another day when you may want to have an updated sort of chat if you've got further questions on any particular thing. But effectively, as a business, we are now in a position where we have between 3 and 5 products that are ready to go, ready to market, and ready to sell right now, all of which have a business model around them that generates revenue, and all of which can add substantial revenue streams into the business. Most of them are with reasonable results, multi-million-dollar turnover ideas. X3 and Wazon, again, in my opinion, are substantial businesses. Wazon, I still believe, is $1 billion idea. I've never changed from that feeling, and I still feel it today. X3, I think, is certainly a multi-million-dollar thing, and it could be greater dependent upon the traction. But we have generated the business into a point where we actually have the ability to start making money, which is another factor that we've been held back by because there's a number of investment companies that won't actually speak to us or invest into us unless we actually have revenue streams. We've had a number of meetings, or I've had a number of meetings over the last 2 years where the interest has been there in what we do, and as soon as it's a case of what product have you got and how many clients are buying it, it's been, you don't fit our criteria. And I've actually had 2 in the past week that have one had an investment criteria of at least $1.5 million that they invest into a company, but they want to see revenues coming in and customers buying it. I've had a call literally today with someone who's very interested in what we do, but really wants to see a revenue stream before they'll jump in. So it is a battle that we have in the sense that we have to have revenue streams coming in to make ourselves more appealing to everybody. So that's one of the first problems we've had. Now, unless there's any sort of clear misunderstanding on any of those products that anybody wants to address at this point, I'll probably move on. So what we're looking at and what we're trying to address is sort of proposals for the future of the company. And in our meeting in Spain, I tried to highlight to the board the issues I've had for the last couple of years with regards to some of the conversations I've had and how that gets addressed. Now, for one, for example, if you take Wazon, every time I've spoken to somebody about Wazon and explained what it did, and then explained that ultimately the company is available for sale if someone would like to buy it for a big enough check, people's reactions have very much been, well, you don't seem very committed to the company. And it's been a running theme where I've really sort of argued it out a million different directions. You know, we're focusing on other things, iStein, etc., etc. Ultimately, we're fully committed to it, but you know, for the right amount of money, we would walk away and someone would get a bargain. I've argued as many different ways as I can, but ultimately, every time someone says, well, if it's so great, why are you selling it? So we looked at various different ways of how to address this, and we are basically going to propose today a solution that we think is the way to solve that problem, and another element of factors that we're looking at. So again, in the meetings in January, I highlighted about one method for raising money would be to get the company EIS approved. Now, it's not substantially expensive to do it, but it's not cheap. It's become a little more difficult to do so because you have to get people that are interested in investing, and you have to name names and addresses before you can actually even progress with the EIS application nowadays. So we begun EIS approvals with, or the pre-approval is what it's called, with HMRC for Wazon in, I think it was February of this year. And we progressed it to a point, and then we had this thinking with regards to some of the challenges we were having for the company. So one of the things that we've assessed and come to the decision on in the past board meeting, which is what we're really wanting to explain today, along with a few other bits and pieces, is that we would like to propose to all investors of Wazon and iStein that we merge both of the companies together. Now, I'll explain in a moment how we propose that working, and the reasons for it. The reasons for it predominantly are as follows. The first one is currently the most invested tech section in the market. So the number one investment for tech industry is AI. Number two is cybersecurity. So bearing in mind what I mentioned to you earlier regarding the security of the AI, we would be operating with a merged company, which we would flag under iStein. So basically the proposal is that the companies become iStein, and it would be sectioned as an AI company, an AI research company, research and development company. And that company would be very trendy for the current investment market. One thing it will do, it will also save us a lot of money. We have dual costs. So, for example, accounting costs and various bits and pieces. We are literally paying twice for doing the same job, which is, for a company that is limited with its funds right now, doesn't make sense. But secondly, it allows us to have a business that we say, okay, we have an AI company with a number of different products. So one of them, and our flagship, is we have the ability to read the media quicker than anyone else can. And if someone thinks it's amazing, they're more than welcome to buy it, but actually we're developing it anyway. Now, if someone says, okay, well, I'd like to buy it, we'll say, great, that's perfect. Give us an offer and we'll carry on with what we're doing with the business. We're not selling the business, we're selling the concept. So in essence, the concept is for us to generate a single entity, which everyone that's been invested into either or of those entities gets the win from both of those companies. And as we go along, if we have someone that wants to buy, our intention is still to sell the WAS-on concept. That's never changed, and it's still there. So don't think for one moment that the intention is not to try and find someone with a big check to give us the money. The aim is to make it look like we have a business that is selling a product rather than us giving up on that business, which makes it a lot easier to have that conversation. And it means that we may have other parts of the business that may become desirable. Now, X3, for example, we believe is a perfect target for Google to acquire if we get it into production. Now, that may mean that they come along and buy that before someone buys WAS-on. So the idea of the merged companies will mean that you won't have one go at sale of a company, you'll have multiple goes at sales of product, and the company will keep going. So your shares will be there, you would get a windfall if we sold a product, but you would ultimately still stay involved in a business that's growing along unless you chose to exit the business. So that's the concept behind why we're proposing the merger. It will also mean that we go out with, as I said, an AI company, which actually there's a lot of people that are looking at AI companies to invest into, where if you go out with something that people perceive to be a search engine, which is ultimately the way that WAS-on sort of sits itself, people immediately go, you're never going to beat Google. So we're not trying to, but ultimately that's the first thing that people think. You can't beat Google, so why are you trying? So in short, just as a recap, the idea is that we are proposing to everybody that we merge both of the companies together, and I'll explain how we're proposing that to happen in a moment. The company will be called iStein, so all of the shareholders of WAS-on and iStein will be merged into iStein, and iStein will be the main company. WAS-on will then hold any IP, so it'll become an IP company, so we'll retain the company, and that company will hold all of the IP, of which you will hold what is now WAS-on will become 100% owned by iStein, so you won't lose the IP. It's no one's trying to sort of do any smoke and mirrors. iStein will be the 100% owner of WAS-on, and WAS-on will effectively roll into iStein. Now, another factor that I've battled with is quite a lot of detrimental comments about the name WAS-on. So one of the factors we're proposing to do within this as well, and effectively we're going to do this probably even if people regret change the idea of the merger, is to rename WAS-on. So The concept behind WASON now is that we are looking to get the spoken word seconds after it's broadcast. So within the literature, we've always had this whole lot concept of we believe that we can do that within about 6 seconds with a fully operational system. So we've basically renamed the concept, as in the product, to seconds away. So the idea is that we are seconds away from delivering you the spoken word. And it gives us a very easy way to explain what we do so that people understand very quickly what we do, they understand why it's useful, and we have a product that just sits inside of iStein. So iStein is the company, seconds away will become the product, and WASON as a company will become a holding company for the IP of anything that we hold in the future. Basically, that's the concept behind the merger, and partly why we want to have this conversation today, so you can understand this in a sort of spoken word rather than just trying to type this all out. The proposal that we've got for you is that we intend to do this unless there is objections from the shareholders. Now, we've looked at the full shareholding of both companies. We've looked at what needs to happen. And effectively, what we're going to do, this broadcast is going to be distributed to all shareholders by tomorrow. It will be live, available to rewatch if you want to rewatch it to understand the facts. I'll be available to answer questions over the next couple of days if you've got any. But effectively, by next Friday, not this coming Friday, but the following Friday, if you wish to object to the idea of the merger, please put in writing to the company on the email address that we've already given you previously that you object to it. And if we have objections of greater than 25% of the shareholding, we will stop it. We will probably call a face-to-face meeting to then talk it through further. But unless we get objections to the concept, we will go ahead with the merger idea, and I'll explain to you how we look to do that in a moment. So hopefully that's clear with everybody to this point. The next point that I want to bring on before I explain how the merger is going to work, because you probably want to understand this part before the next part that's going to come along. So obviously in January, we explained what's been going on previously, and we looked at what was going to happen and how we were going to happen. Now, we have taken our time to do it, longer than maybe we hoped to do it, but we wanted to make sure we did it correctly for everybody involved. It will, but I'll explain that again in a second. The redistribution of the shares from the founding shareholders was not an easy concept for anyone. It wasn't easy for us to deal with. It wasn't easy for them to deal with. It's been a very difficult time for everyone. No one's enjoyed what's gone on over the last year or so. One thing I can say is that the current board, which is formed of majority shareholders now, as in people that invested into the business, along with two of the previous board and myself, which obviously I'm sitting somewhere between the two, are working very closely together. There was a very good clear the air point in time quite a long time ago, and it feels very different, and I can't speak highly enough for everybody that's been on the board. I know that there's still, I speak to shareholders regularly, and I know there's been lots of concerns, lots of comments, lots of opinions, and various bits and pieces. What I would like to try and do with this meeting today is put this to bed fully and once and for all, to the point where it's not even a case of really needing to answer any more questions, just reward you for the inconvenience that you've felt that you may have had, the difficulties, the disappointments, and everything that goes with it. We can only work with what is now. Going back isn't going to change anything. It is what it is. Ultimately, we hope that with the proposals that we're going to make today, that you'll feel some reward for what's gone on. It won't ease the frustrations, but it will hopefully put you in a position where, when we get this right, and we intend to get this right, that you'll feel the reward for the inconvenience that went on for the time where maybe it didn't quite go with the plans that you had. And that goes for the people that have been involved from the very start. It goes for the people that invested the most amount of money, and it goes for the people that have put a lot of time and effort into this over the last year or two. And this needs to make sure that everybody, and that includes the founders that have put a lot of time and effort into this, and they'll admit to themselves they've made mistakes, but no one's perfect. It is what it is. We have to move on. So with regards to the redistribution of shares, as we wrote to you at the beginning of the year, we have come to an agreement with both James, Dylan, and David, where they've contributed back shares into the company that they held. We had put a proposal to them that involved some funds coming into the company, but that wasn't possible. So there was an agreement to effectively return 75% of their shareholding to the company that they held in both companies, and we as the board took a decision to distribute 2/3 of those shares to the shareholders that have invested into the company. Now, that has been worked on very carefully, and I'm at this point going to separate the two companies again into two for the moment. So effectively, what we've done is with Wazon, the shareholding, I'm just flicking up some notes, so excuse me for 2 seconds. The shareholding in Wazon meant that effectively there was around 25% of the shareholding came back into the company. And it actually meant that a redistribution with the 2/3 was is going to be split around everyone that was invested into Wazon. So effectively, of the 25% of the company that's come back in, 2/3 of that will be split out. So I can explain to you in simple terms, if you owned 1% of the company, and you might want to make notes on this one if you've got a pen and paper, if you own 1% of the company, that actually entitles you to about 1/3 of a share. Now, I'll explain in simpler terms in a minute, because none of this will make sense. This has taken a lot of maths and a number of weeks to try and get this right, but I will simplify it as we go along. So in essence, 2/3 of the shares that have been returned into Wazon have 2/3 will be distributed out before any merger happens, and that will be forming part of your pot for the merger. With iStein, a number of investors that were invested into Wazon were gifted shares into iStein. So we believe that that gift was already a gift. Now, I understand that gift was because iStein went in various different directions, but we believe that ultimately that gift was a financial gift into a business that will be worth a lot of money, and has attracted over £1 million worth of investment into it so far. So we don't feel that it's fair for the redistribution on the shares in iStein to go to the people that were gifted free shares. We believe it should go to the people that put the money into iStein, and then the merger will happen thereafter. Now, in the flip to that, what we will be looking to do, we've assessed the value of iStein and assessed the value of Wazon. And iStein, to be fair, was probably oversold in the value based upon what some of the promises it could potentially do. And as such, possibly, and it's only a possibility, it's an opinion, was possibly sold at a value greater than probably what it was worth at that point in time. Hence, one of the reasons why we feel that the people that have put the money in are probably owed a few more shares for the investment they put in. With Wazon, we believe that its capabilities are undervalued. So just to clarify, Wazon, the last shares sold, or the last few shares sold in Wazon, valued one share at £35,000. Now, iStein's last shares that were sold at £5,000. So effectively, there's 4,000 shares in iStein and 200 shares in Wazon currently. That values Wazon as a business currently, if you based upon the last investors, at £7 million. iStein, based upon its shareholding and the value of the last investors with the 4,000 shares, values it at £20 million. And that disparity doesn't make sense. we believe that WASON as a concept on its own right and what it could do, and as I said in this call already, I believe WASON finished is $1 billion idea. Now, that's not to say that iStein can't be. In combination, we think it could probably be bigger than WAS in the long run. But ultimately, as it stands as an idea, iStein is probably combined worth about the same as WASON. So we had two choices. We had to either devalue iStein or increase the value of iStein for the purpose of the merger. And we believe, and I'll explain why in a moment, we believe that WASON is undervalued considerably. And as such, we feel that it should be marked at the same value of iStein for the purposes of the merger. So trying to explain this in simple terms, and you will get this written and documented to you so you can understand. Okay, I understand the questions are coming in and things. If you can try and keep the questions to the purposes of what we're going along rather than just opinion, because that would be helpful with its questions. What went on 2 years ago is not really relevant. Sorry to jump in against questions, but ultimately we can only work on the basis of what is now. And what is now is we believe that WASON finished, and there's work to do on getting it finished. Is to that business finished is probably today could be argued as being a £20 million business. iStein is currently valued on the basis of what people have invested into it as a £20 million business. So the intention is to merge the two together into a £40 million business, of which I'll explain now how that split's going to happen. So for the purposes of you trying to work out what you will have on this, and you will, as I say, you will receive this in writing, is to work out how to do it. I've created a virtual pricing on WASON of 20 million, and I've also increased the share value to 8,000 shares. Now, there's a number of reasons why we had to do that, because there was a lot of, as I mentioned, if you had 1% of the company, you would get a third of a share. So it's impossible to give a third of a share. So we needed to get round numbers. So for the purpose of your maths, you want to work on the basis that WASON, for the purposes of a virtual shareholding, we won't be increasing the shareholding on WASON, will be 8,000 shares, which will represent 100% of the company. So if you had one share, you would now, for the purposes of this, have 40 shares. And each one of those shares will be valued at £2,500 a share, valuing the business at 20 million. Now with iStein, it's already valued at 20 million. There's 4,000 shares. So that means that in essence, one share is £5,000. If you have 1% of the company, you've got a percentage of the 20 million. So that's effectively the way that we're going to put it together. So in simple terms, if you had 1% of both companies, you will have 1% of the future company, but instead of having 1% of one company that's worth 20 million and 1% of another company that's worth 20 million, you will now have 1% of a company worth 40 million. So where your shareholding would have been 200,000 in WASON and 200,000 in iStein, it will now be valued at 400,000 in the new company, as in the new co iStein. Now, you may think I'm insane that I'm now trying to value the business at 40 million, but I'm going to explain to you in a moment why I believe it's going to be worth more than that in the very near future. So for the purposes of the new co, so this is where it gets a bit more complicated, is that there will be 16,000 shares in the new iStein. So we'll be doing an increase of shares from 4,000 to 16,000, so a 4-time split. Okay, I'm going to come back to the questions in a minute. So for the purposes of the new business, if we get the agreement from everyone that we are going to merge the two companies, we will gift the shares round to everyone, so everyone will have their shares. Those shares will be uplifted, so anyone with WASON shares will be basically, which are currently valued at 7 million, as a business, will now have a business value of 20 million. So you'll be looking at a 3 times increase in your share value immediately before it's then joined into iStein. The iStein shareholders that paid money for the shares will receive the uplift on the shares, and then that part will be merged into each other. When you actually see the numbers, it does work out extremely fair, and I've shown it to a few test people to see their opinion. Apologies, I appreciate it's very difficult to do it with everyone, but I've got some personal relationships with sort of certain clients that I can check what their opinions, whether they feel it's fair. Most people believe that the numbers work out extremely fair on the behalf of all investors. So the concept is, if you have one share in Wazon, you will now have 40 shares, and those 40 shares will be valued at 2,500 per share, and that would be what goes into the new company. If you have one share in iStein, it will remain at £5,000, and that value will go in. So you will have a monetary value that you combine the two together based upon 20 million for each company, and then you just simply divide it by 2,500, which will be the share value of the new business with 16,000 shares in it. So effectively, the new company will be valued at £40 million. There will be 16,000 shares, and each share will be valued at £2,500. So whatever your value in each company is in monetary value, divide it by 2,500, and that will give you the number of shares. We will be sending this round so that you can see this in writing. Anybody that doesn't understand it, we'll happily answer the questions. But in essence, just to recap, if you have a Wazon share, 1 share, 10 shares, whatever the share is, your share value, which is currently valued at £35,000, will be increased by 3 times, just over 3 times, and that value will be added into the pot for the mix. Inclusive of that will include your free shares that are being gifted to you from the shares that have come back before we merge them together. So you'll get the free shares, that will all be increased by 3 times, and then that will be your mix in. If you have iStein and Wazon, you take the monetary value from both companies, join them together, divided by 2,500, and that will give you the number of shares you have. Now, to explain why I believe that the company is worth 40 million, I need to explain what we're going to do with the company that's merged. The first thing is, we will now have a company that is an AI company. Okay, with regards to work put in, etc., please, can we keep the questions to this thing? Because this is now opinion, not questions. This is the shares that you are getting back is for any inconvenience caused. So for the purposes of this, can we please stick to questions that are relevant to this conversation, and anybody that wants opinions, we can deal with it later. The concept for the company is, an AI company is a very marketable tech company. It's the most marketable tech company. So it's very easy to justify the value of an AI company because a lot of people are trying to invest into them. We are going to go back to the table, or back to getting the EIS approval in the UK. So to simplify this, and just so you understand what EIS is, let me clarify again what EIS is. It stands for Enterprise Investment Scheme. It's a UK scheme that's available to UK investors, higher tax rate investors, people that are paying 40% tax. So what effectively happens is that anyone that's basically paying 40%, by investing into a company that has EIS pre-approval, which we will get, it's not a case of if we get it, we will get it. You can invest at, well, a company can receive up to £5 million in any one tax year and up to £12 million in investment. By receiving that money, we sell shares for that money. They have to be EIS approved shares, so we have to have shares that are set aside for new shareholders coming in. And on the basis of the investor, what they gain is that the government give them immediate tax relief of 30%. So instead of paying 40% tax, they only pay 10%. So they've immediately saved money on their tax bill, and the money comes to the company. One of the benefits is the company, or the company and the investment into the company receives inheritance tax protection after 2 years, capital gains tax protection after 3 years, and in the event of the company going into administration or effectively going bust, the government give all investors back 75% of the money they invested into the business. Now, that also applies to existing investors. So by getting pre-approval, we have effectively given a 75% downside protection to all existing investors, as well as future investors that are coming in. But in addition to that, capital gains tax protection after 3 years and inheritance tax protection after 2 years. Now, that makes it very attractive for investors to come in. They're more interested in the tax relief than they are always about the value of the business and what it can do. So our intention, one of the ways that a lot of EIS companies market themselves, is they generally offer around about 20% of the company's value, 20 to 25%, for the money that they're looking for. And our intention is to try and raise £10 million in EIS money at a value of 20% of the business. Now, once we do the split of the business, the shares that we've retained, the 1/3 share that we've retained and not distributed around the investors, actually leaves us with just over 20% shareholding to do the EIS. There'll be no requirement for share dilution in the future from any existing investors, and we will have the ability to market 20% of the shareholding for £10 million. If we manage that, and I'm very confident we will because of the tax relief benefits that it gets and some of the people that we're already getting, if we achieve that or even achieve some of that, first thing that will add share value back into the company. So the minute we get, for example, even if we get £1 million for 2% of the company, because obviously if we're aiming for 20% for 10 million, we would only give 2% for 1 million. We've immediately put a price on the shares as being at 20% based upon 10 million, a £50 million company. So you will then have a further rise in the share price from the 40 million that we're proposing for the shareholding on the merger. So if we can do this, and we can probably do it up to about 25% shareholding, even if we have to give away 25% of the shares to EIS investors for the 10 million that we're looking for, that will value the business at £40 million from future investment that's coming in, and we will actually have the money we require to finish off both WASON, or Seconds Away as we now call it, and X3. So we will be in a position to finish both of the major entities with that EIS money. Now that will put us in a substantially strong position because we will not require further funding. We will have two things that when finished, in my opinion, are multi-million, if not billion-dollar ideas, and a hard price based upon people putting money in of 40 to 50 million pounds as a shareholding value of the company. So I know there's a lot of numbers thrown around there, and I hope they've gone in. I'm sure there's some confusion because it's a lot of information to take on board. However, the basic concept is this: is that we believe that a merged company gives you multiple exit routes. It gives everybody that's invested into the companies, be it either company, a share of all of the work that's gone into the whole thing. The people that were there from the start are getting a massive uplift in the sense that we're going to uplift the company value by 3 times overnight. So, you know, I know some people have been in this for 3, 4, 5 years. That gives you a massive spike. And the minute that we get the EIS approvals, you are looking at a hard value of that money based upon future people coming in. And bear it in mind that the worst case scenario as an investor that invests into EIS is that if the company goes wrong, the government give them back 75% of their money, which means they pay 25% tax as opposed to what they were going to pay, which was 40%. So they can't lose. So it actually makes it very attractive for people to invest. So hopefully you'll understand from the EIS why that makes it attractive for investors. And I can answer in a minute some other questions with regards to how we're going to go about that. But just to give you an idea, we are currently in conversation with, and I won't name names because I don't particularly want to have broadcasted names, but I can confirm that I'm in conversation with one former Premier League manager who is substantially wealthy, who is looking at it for an EIS investment purpose. and has invested over £5 million into one business previously himself. Not all for EIS purposes, but has invested a single lump sum of over 5 million to one business previously. I'm in talks with an accountant that manages 40 Premier League players who are very interested in what we're doing and have shown some interest in providing EIS money, possibly the first 5 million. So this isn't a hit and hope. We have done substantial research to see whether we can get this money in the event of having the EIS pre-approvals. And the pre-approval isn't a case of if, it's a case of when we get it. It will probably take between 6 and 8 weeks to get it from once we have the company tied it into one. So as long as everybody's agreeable and we go ahead with it, it will probably take to the end of next week to get that agreed. It will take about a week to do the workings and the maths and getting it done. And then we will continue with the EIS approvals, which will take us 6 to 8 weeks, which will then give us the ability to really target the hard cash that we need to get Seconds Away underway and X3 underway if it doesn't come in other formats. Now, we'll come back to that in a minute because we have been speaking to other investors as well. That effectively was the complicated stuff that we needed to explain. It's very difficult to explain it like this. It's even more difficult to put it down in writing. I'm sure people are going to have a number of questions, which I'll try to answer from the list of questions here. But if you would rather have a one-to-one sort of conversation, I'm more than happy to do that, be it on Skype or on the phone or however you want to do it. But in essence, that was the main reason for this webinar. I'm hoping you found it a useful sort of exercise, and it's one way. We're exploring other ways where we might be able to have sort of meetings where people can contribute and talk. We're looking at various different technologies for how to do it. Just going back to the product side of things, one of the products which I didn't mention, which we will have as a workable product, and actually is one of the reasons why we see these companies starting to join together, is that, and you know, I'm going to name this just for the purposes of, and I'm not taking away from Steve's contribution to this, and I know Steve is involved in this conversation and watching, but I would like people to understand this and know this, because I know that there's still quite a lot of ill feeling towards the original founders, and I'm going to explain how they've been trying to help and how they have been contributing. James has pretty much single-handedly, along with his son Kane, put together a speech-to-text engine which is not far behind what Google can do, who are the market leaders in that space. Now, speech-to-text is the most expensive part of what we will need to have a fully working Seconds Away, call it WASON, Seconds Away, whatever you like. For us to do that and read the radio and the subtitles, we need a speech-to-text engine that's capable of effectively doing that for us. Now, just to give you an idea, Google charge us £1,500 per month per channel for that service. So it's a substantially good product in its own right for the abilities of what it could do, but it will save us millions a year from a financial purpose with a finished WASON Seconds Away. So we have got that working on the FIs, which is the hardware that we have a lot of, which has been no mean feat. We are a few percent behind Google for accuracy. Now, that may sound really good, and it's going to take a little bit of work to get us up to exactly what Google can do, but we're not far behind. Now, that's a massive achievement. From somebody that I know that there's still quite a lot of questions being asked why he's involved in the company. I think his involvement in the company is fully justified. I can't speak highly enough as to the work ethic he's put in, and I would like for all shareholders to understand that James has contributed obviously to the shares that are going back and has put in his heart and soul to try and get this business to a point where we feel it can be a business rather than ideas built within the business. Now, both Dylan and David have also been helping. They have both been very proactive with regards to trying to help raise funds. I've been working closely with both of them. There's been a lot of challenges as everybody knows. And all I would like to say is, I can't speak highly enough for the work they've been putting in to try and help with regards to getting things back on track. And I think it's important that they've all contributed what needs to be done to basically show their appreciation for the efforts that's gone on. And I think we have to leave the past in the past and move forward. I'm hoping that the proposal that's gone out to everybody and the way that you'll see this will benefit you with shareholding in the future. And if we can get full value back into these shares, and I believe there's value in the shares, but you may not. I believe that those value will be very hard value in those shares the minute we get the EIS pre-approval. With regards to the raising of funds, that's been a challenge. It's not as easy the second time round. We have, as a business, we have recently received some research and development tax rebates, which has given us some liquidity, but we are still very much running on gas. We haven't got deep pockets right now, and I'd be remiss to tell you otherwise. I believe that it's very important to me in the position I'm in to be as honest as I can with shareholders. We as a business will survive. We will make sure we survive, but it's tricky right now. It's been tricky since we took over, and it's not changed or got any easier. We have been trying to cut all costs that we possibly can, but still make sure we remain efficient. And I'd be lying if we didn't say we needed some further investment. We do. We need short-term investment, and we need, obviously, longer-term investment. I've explained the EIS, which is one of the big factors that we're looking at with regards to the bigger investment. We've been talking to a few funds. Some shareholders have been helping with that and bringing some fairly good people to the table. We have one or two fairly strong leads sort of developing with a couple of different people with investments maybe up to 500,000, 250,000, various different figures in these sort of brackets have been sort of muted and sort of suggested. Going to people that put institutional type money in means that the due diligence process is considerably more difficult. And generally they want to see a product. They want to see revenues coming in. So that creates its own challenges. So we currently haven't raised any further investment into the business since January. There's been a number of reasons for that. The world is in a slightly different place to where it was a few years ago. Second to that, the existing shareholders have obviously been very nervous about the position of the company. Future shareholders have looked at the company and said, okay, well, what's gone on? Where is it? Why isn't it where maybe it could be or should be? And as I've mentioned, investors that are institutional take a bit of time. They're a big boat. They take a bit of time to steer in the right directions, but we're getting some traction. We've had debates between the board. I have taken a decision to have this conversation today with regards to putting a proposal to all shareholders. As much as I understand fully the concerns that shareholders have had about the past, and I understand they're probably the concerns about the future, I believe we have a very strong proposition for the future, and I think we have a very strong direction already in place. But we do have a challenge at the moment with regards to current runnings of the business, and that doesn't mean to say that there's any risk to the business, because we've worked out a number of different ways to cut costs and to slow things down if we have to, and that's what we would be doing, slowing things down, not stopping them. We will continue until such point that we have this business successful. However, speed is of the essence, and we would like to get this thing moving along. So one of the things that I feel is necessary is for me to appeal again to the existing shareholders. We are spending as much time at the moment on developing the business as we are on trying to raise money into the business. And obviously there's only so many people and there's only so much time to go round. There are currently, if we merge the two businesses together, they would be 65 shareholders in the new business. There are currently a combination between the two, they would be a combination of 65 individual shareholders. To give you an idea, and this was a number I threw at somebody today and they were like, wow, that's not a lot. We believe that if the existing shareholders, well, it's not even a case of we believe, we know that if the existing shareholders were open to investing further funds for an investment of only £10,000 per shareholder, we would be in a position to fully finish, and have in production within 4 to 6 months the X3 module. Now, that is, I'm just looking at the modules, laughing there. You've got to look at it like this. 65 people can make a big dent where 1 or 2 people can only do it in such a speed. Now, I'm not asking for anybody to invest further into this business. What I'm asking shareholders to understand is for this business to succeed going forward, it is going to need some short-term funding as well as the bigger funding. I believe we've given a very compelling case for why the future funding or the bigger funding is within our grasp. But we believe that the X3 module, which we have worked out a business case that, just to give you a quick recap of what it is, TensorFlow, who are the market leader for AI learning in the space of training AI frameworks. TensorFlow, which is Google's AI learning system, actually has around about 80 to 85% of the market. So most people train AI frameworks using TensorFlow. And that includes people like Netflix, Uber, Facebook, and a number of Coca-Cola, a number of large companies. We have developed a system where we can train what that process is around 3 times faster than the current ways of doing it, which is substantially faster than the way that Google can do it, and 4 or 5, 10, 15 times faster than some of the other competition in that space. Now, our speech-to-text learning system, for example, we're already 5 months into training it, and we've still probably got about another 3 or 4 months to really catch up on Google. Maybe quicker, but probably that sort of time frame. So let's assume that process is a 9-month process. If we could do that in 3 months, that's effectively what we've got. Now, I've spoken to a few people that get it, a few people that don't understand it, and I've sort of come up with this as an analogy. If you imagine I provided a fuel, that a supplement fuel that you could put in your engine of your car, and it allowed your car to drive down the street 4 times further from one injection of this fuel, how desirable would that be? So if it made your car drive 4 times further for the injection of one thing into your fuel tank, how useful would that be? Our model is based upon us receiving $2 per month from each person that uses a module, and targeting one client base that we've found that has 300,000 people in their module. So if we have one module in production, which we believe we can get done within 4 to 6 months, we would have a revenue stream of around $6 million a year from that, based upon $2 a month and 300,000 people using it. If we get 5 into production, which we think we can do inside of 12 months, we would have a business turning over between $30 and $50 million a year. Now, these numbers may seem big, and there's a lot of factors around it, and there's some numbers I can send you around that are being updated in all the different paperwork, and we will distribute that after today's meeting. But in essence, and again, just to remind you, from a £10,000 investment from each one of our shareholders, or maybe a friend of a shareholder, we would be able to get that into production in 3 to 6 months. That would substantially change the look of this business in a very short period of time, and could be the first thing that we can sell. Let me remind you, we need around £10 million to get WAS Seconds Away underway. So it's pointless even progressing it, as the moment it's a concept that requires that money to be finished. And that's being completely honest and completely blunt. We have to work on what we have, and until we have £10 million, it is impossible to get that thing finished. And I know there's a number of different opinions as to whether that is. I can assure you, we spent around 2 months fully reviewing it and there is no other way than to do it the way that we've done it. We've got it down to the bare bones of what it can be done. So again, one thing I would suggest is to have a think about the business that you invested into and where you would like it to be. And if you feel that you could help, it would be much appreciated. What we're proposing is that for existing shareholders, now bearing in mind that the new business will be valued at £40 million, that values the share at £2,500 per share. If you felt the need or felt the requirement to invest in future money, and there is no minimum or maximums, we will do a 2-for-1. So effectively, we'll give you 2 shares for the price of 1 because of the fact that you're existing shareholders. This will only be for the existing shareholders. If you can recommend anybody that you know that might be interested in investing into the business, again, what we will do is we will contribute, we'll deal with them, we will let them invest into the business at the current market price, and we will offer to you, and we've put this in writing to you previously, and we will put it in writing to you again if you wish to have it, we will offer you a commission for the help for putting it in. So we're not asking people to do anything for free or help us for free, but we would like to see whether the existing shareholding can assist us. You know, there's a lot of people that know a lot of people, and ultimately many hands make light work and all that. Realistically, we believe we've done an awful lot of work, and sacrifices are being made all round. I can assure you that nobody involved in this company now is being paid an excessive wage. All of the directors that have come on from the shareholders are working for free. The current directors that were receiving a wage are receiving substantially less. Steve, who is involved in this call, as you may have seen, hasn't received wages for a number of months. So I can assure you that everyone is taking sacrifices, and we intend to keep doing so until we get this business going. If you wish to help, that would be much appreciated. There's no pressure to do so. But I'd be remiss, again, as I said, if I didn't have this conversation and I didn't explain where the company stands and the challenges that we have. We can move this thing further and quicker if we can get some shorter-term funding in. But that shorter-term funding is targeted towards the module process. So if we don't get anything from everyone, so be it. That's it. We're working on it anyway, and we will get it. I've got a track record of raising money, and I think I've proved that. And as much as we haven't so far, a lot of that has been down to wanting to tidy up the company first. So I think I've covered most of what I wanted to cover. I'm going to just flick back through the questions now and attempt to sort of go through them one by one. Please feel free to add as we're going along. Just looking at the questions. Wayne, right. Why would it cost so much? I think that was related to WASON. There's a number of factors. There are a finished WASON requires it to be finished and be able to run. The amount of money that I've given you gives us a 2-year running cycle without generating any revenue. It covers all eventualities so that we don't halfway get through it and then run out of money. It builds in some money to pay people for raising the money, because people don't do things for free, even though a few of us are. And it contingencies. If you were making a film, you budget for a film, but generally you try and run under budget. So we have budgeted for £10 million, and we believe that we can get that fully finished for that sort of money. We believe that we can pay people for raising the money, and we believe that we can run the thing, which is substantial with regards to the data and the processing, the storage of the amount of data for a period of time. So that is the number. We have a very detailed breakdown. We have substantial work gone into that. As I say, we spent nearly 2 months working out those numbers, and we're very confident that that is the number. I'm happy to speak to anybody one-on-one. I'd rather do it one-on-one if you want to challenge it, and I can explain it. But I'm very confident that if we debate it, that I will win, because we've spent a lot of time on it. And I don't mean that in an arrogant fashion. I'm just pretty sure that we've covered every track. Will it affect the share percentages? That was related to the, that was from Michael. That relates to the shares. It doesn't affect the shareholding you have. Your shareholding will be going up before the merger, as I mentioned. So anybody that's invested into WASON everybody that's invested into WASON, every person will receive 2/3 of the shares that were rebated, which was nearly 24 or just over 25% of the company was rebated into the company, and you will be receiving 2/3 of those shares. 1/3 are being retained to basically use for the EIS application. In iStein, everybody that got shares will retain their shares. Any person that put money into the company, because there was quite substantial money put in for very small shareholding, they will receive the 2/3 uplift. Obviously, people were gifted the shares in the first place, so that's the iStein gifts. Those two things will be merged together. And don't forget that with WASON, your price of your shares, once you have the uplift, will then be uplifted by three times. So where the company is valued at 7, it's going to be increased to 20, and at that point you'll merge together. So there is a huge uplift for the WASON shareholders. There is a very good uplift for the iStein investing parties, and I think that's only fair because nearly £1 million is put into a business for a shareholding substantially below 20% of the company, to give you an idea. Hopefully that's answered Michael's question, because Wayne mentioned I never answered it. If it wasn't free, it would not have happened without... Sorry, I don't understand that question, Wayne. In a moment, maybe if you could type in another explanation of that it wasn't free, it would not have happened. I don't really understand that as a question, sorry. Right, in regards to the question of when was it able to do until 2 years ago, and why was it taken offline, right? The company has changed. It's changed along the way, and why things were taken down, it was taken down because I asked for it to be taken down. I'll take full responsibility for why we took down the original website. The reason it was taken down is because it was costing an awful lot of money. It didn't look very good. It had no direction with regards to what it was aimed to do, and it was turned into a demo that could actually demonstrate it. That demo subsequently has been a little bit confusing. However, it was taken down because the intention was to sell the company, not to build a website. Maybe it was intended to build a website originally, but when I got involved in the company, I asked what the focus was for the company. It was to sell the company. So we designed a demo that was aimed at selling the company. So anybody that wishes to have a debate on that, it's probably better to have a one-on-one debate on that, because I'll take full responsibility why the original website was taken down. It was taken down at my request, and I still believe we did the right thing. It may feel like it was work lost, but actually the company didn't have the funds to grow it, so it was never going to be able to finish what it started without large amounts of money, and that money has never been achieved or raised since. So it's a sort of a moot point to an extent. Right, Michael, your question is when can I discuss with me? It's probably best to get on a one-on-one call, and I can explain your current shareholding, how it merged together, explain things. This goes for everybody, not just for Michael. For anybody that would like to have a one-on-one explanation as to where your shareholding stands, what it will look like, it's all been worked out. I can run it through with anybody, and I'll happily explain how your shares will look in the future and what you might like to do. Just one question which hasn't been posed here, but has been posed to me several times previously. We are not currently in a position to help market anyone's shares. You're more than welcome to sell your shares. They are fully transferable and fully tradable. Once the company has been merged, if that goes ahead, you are more than welcome to sell your shares if you have a person that wishes to buy them. And we will assist as best we can. We are not currently in a position to do anything other than try and raise money into the business, because we need the funds to keep the business ticking along. So we have to focus on the shares that we have on the shelf to bring in the money to keep the company ticking along. And hopefully that will be something that everyone understands. If we can get to a point where that changes, we will certainly let you know, but right now that has to be our focus. Wayne's question of why was it was fully functioning. It never was, Wayne. It was a fully functioning website that picked up some channels in Europe, a number of channels. I agree, more than what's in there now, but it looked messy. It didn't fully function. The actual terminal that is built still has an awful lot of work to be done to it to tidy it up. And I know that I don't want to get really into that on this particular call because it's difficult to debate. We had this debate in Spain. We still have the same thing of the work that's going to be required to get this to enterprise abilities. Now, this is Wazon I'm talking about. The terminal for Wazon probably requires at least 6 months worth of coding and a number of coders to get this to the point where it could handle the traffic that the world would be throwing at it. So it is a very competent demo, but that is all it is currently. 1% of Wazon would be 80 shares. That's correct. Yes. So if you have 1% of the company, you would have 80 shares. Those shares, for the purposes of the merger, you work them out at 2,500 a share, which will give you your share of what is a £20 million company. Okay, Wayne's question, but for those who enabled the iStein to have happened in the beginning, don't get any of the redistributed shares unless they put money into iStein. Seems unfair. Okay. What I would turn around and say is that every person that was invested into Wazon that led into iStein, now bearing in mind that no investment money was put into iStein by any of the investors that invested into Wazon, were gifted 50% of the shareholding they held in, if you held 1% of Wazon, you got 0.5% in iStein. To give you some idea, people were paying £100,000 for 1% of iStein. So you were gifted £50,000 of shares based upon what other people invested into it. I think it's completely fair. You may not feel so, and I don't particularly want to get into a debate with a one-sided conversation like this. If anybody wishes to debate it, please do get in contact. I'm quite happy to have that conversation. But you may not feel that it's fair, but your fairness comes from the fact that the Wazon shares are uplifted by 3 times. That's not happening to the iStein shares. So the people that got the redistribution just got probably what they should have got in the first place, and that's being merged with no uplift. You're getting a 3 times uplift on Wazon. That's hopefully compensating for the fact that you're not gaining in the iStein part of it. Michael's question, doesn't this enable siphoning of money from one project into another? Not really, because we have very limited funds in the bank between both companies. So any future money that comes in will hopefully come into one company, and that will actually make it an awful lot easier to actually distribute the money where it needs to go rather than trying to work between the two. We have no more shares in Wazon to sell. So the only way to raise money into Wazon is a dilution of shares. So if we keep the company separately, just to give you a clue, we will have to dilute the shares in Wazon by 20%. So everybody with a shareholding in Wazon will have to dilute by a minimum of 20% for us to be able to get EIS approval. By doing the merger idea, there is no dilution required. Hopefully that explains that one. Yeah, Gary Walton. Will the numbers in the shares be forwarded? Yeah. What we're going to do is we're going to, I'm going to document this after this for each individual so you can see a very clear distribution of your individual things so that you can see, because there's a lot of numbers to crunch through. So I think if everybody sort of concentrates on their own shareholding, that will all explain it. You'll be able to see how it was done. That's basically typed up and will be distributed in the next day or so that you've got that for each individual party. I'm saying regards to the redistribution of iStein shares, some of us all find a wage over shares and still working for the group. Why should we lose out to the gift? Again, Wayne, hopefully I've already answered that question. You're not really losing out because you did get some gift of shares. 50% of what you had in WASL was gifted over into iStein, so you've already had a free gift. And in addition to that, you're getting a massive uplift in your share value in WAS before the merger happens. I don't understand the question. It's open source, so it's a difficult question to answer. I get you're saying it's open source, but it's not really a question there, so I can't really answer that one. Wasn't this being the research iStein algorithm was found? iStein was created by trying to find a cheaper way to do language translation and then speech to text. So the algorithm that you refer to has never been created. It was what was marketed, but it was never created. At no point so far have we found any mechanism that shows that the original proposals that were put out as a company for iStein exist. I'd like to think that they were, but they weren't. So far, we haven't found a mechanism to show that that algorithm that was there was there. What we are working on now is completely new stuff from where we were working before. And as such, iStein has developed from a number of different factors. And obviously, we've covered the shareholding and how that works. Your question of James can't program. You can't code. That's the Paris question. James can't program. It's not a question, but there is a difference between programming, as in coding, and TensorFlow. TensorFlow is a system that you don't need to know how to code to operate TensorFlow, and TensorFlow is a learning mechanism for AI. The speech to text has been trained on TensorFlow, and it's been trained onto the PHYs, which is an Intel piece of kit that we have. And that has been done by James. There's been some assistance from Steve, but ultimately James put it together, and pretty much between him and Kane are responsible for the majority of the work that's gone into it. So again, it's no requirement for coding to do the speech to text. It's a learning process, and AI, I can assure you that James knows a lot about AI and the process for training AIs. It's been learned over the last couple of years. There's bun fights going on in the middle of there. As I've said before, please can we try and leave the past in the past? Okay, I'm not going to address the conversation regarding scamming because I don't believe that it's been scamming. We've already gone through there. Michael, great question. Does the company get dividends? Yes, would be my answer. Ultimately, my job is to build a business. That's what I've been asked to try and do. And the whole idea for a business is it either gets sold for an awful lot of money or it makes enough money that people make dividends. So what we look to do is obviously generate revenues into the business. And if those revenues are substantially profitable, then we would look to distribute a dividend. But that, in my opinion, would be something that we would obviously have a conversation about as the board. If we did that quite quickly, to me, it would be something that we would ask shareholders on, see what your thoughts were, see whether it's something you should reinvest into the business or not. Apple, for example, didn't distribute dividends into their business for a substantial number of years, but people came into this as an investment. They didn't come into this as an ideas person that are building things. So it was the original shareholders that didn't distribute to themselves. In this case, it would be my vote, and not for the purpose of putting money in my own pocket. It would be my vote that the shareholders should get a dividend. What that dividend would look like would be based upon the profits. But if we were making 50 million a year, arguably you can look at the business and say, well, that's a value of 5 times is the value of the business, and that's conservative on a tech business. But if you have 50 million, you could easily take 10 million, divide it around the shareholders, and still have 40 million to invest back into the business. So yes, would be the answer to the question. We'd be clearly looking at dividends for the shareholders. Otherwise, what was the point of investing in the first place? Wayne, you've posed a question, but this was a new idea that was being worked on almost 3 years ago and consequently led to iStein. I'm not sure which point you were referring to there. I'm assuming because it's out of context, it's not referring to what it is. But if it's speech to text and the things with iStein, as I say, a lot of water has gone under the bridge since then. It's a very different concept. Straight face. I've got a straight face because I'm talking to a computer, and I know there's a few people on the end of it, but this is very unusual for me. A running WAS could have pulled more attention. The running WAS that you had took nearly 2 months to catch my attention. It was only due to persistence by a few people that I even looked at it. So putting it delicately, a running WAS didn't catch my attention, and I see a number of different things. It was actually Touchword that caught my attention, ironically, not the running website. With X3 seconds away, Touchword are concentrating on too many rather than finishing one to completion. Well, that's a good question. How did the demo with the Scottish Sun newspaper go? Oh, is that Gary West? Sorry, I've just got Gary W. Right. Okay, so Gary's questions are, with all the different products that we concentrate on too many things to be in completion. Right, let me address that one by one. So why are we concentrating on a number of products? The first one is we need revenue. Unless we're going to, I saw some people laughing at me when I asked you to potentially invest further funds into the company. If we don't have further funds invested into the company, we need products that we can sell that generate revenues to make money for the company so we can pay the lights and the phone bills, etc., etc. So we have looked at products that we can sell: Read the Radio, the subtitle replacement, Touchword, AI security aspects. These are products that we can sell right now, charge a fee for, and make money. Seconds away, i.e. WASON, requires us to raise £10 million, and we are attempting to get that through EIS and other factors, but until we have it, it's sitting there waiting to go, but we don't have a mechanism making that a working business until we have those funds. It's an all or nothing business. If it's not plugged into the whole world, it's of no use to anyone, not really. It's a toy that other people can play with, but no one's going to pay us for. X3 is something that's within our grasp in an investable level of between 500,000 and £1 million. That is a sum of money that we could achieve to get, which gets us a business that is a multi-million pound business potentially quite quickly. That's not to say that there isn't substantial revenues that can be generated from Read the Radio and the subtitles and Touchword. However, X3 is in another league. So we actually are not trying to target them all at the same time. We're trying to target product that can generate us revenue so that we've got some revenues, whilst trying to raise the money to get X3 going and clearly try and achieve the big money to then build. But they will be separate teams doing separate things. They may be overseen by the management, but they will be separate divisions doing their own thing, exactly the same way as the Apple or Samsung develop a telephone and a television, or a computer and an iPhone. We will have separate divisions run by separate teams on separate products with separate budgets. What happened to the demo with the Scottish Sun? Okay, so Touchword is currently done. It's clever in the sense that you can touch it, but it's not intelligent. It doesn't know what it doesn't learn. So it hasn't currently got AI in it. Now we're exploring ways to how we can build that in, but the Scottish Sun, and the conversation is still ongoing with them, are concerned about the fact that the marketing team love it, the editorial team don't like it. Now, the reason being is that if you, for example, have Rangers as a word and you click on it, the Scottish Sun want you to stick to talking about Rangers as a team. Or if you put Harrison Ford and then in the next sentence you go Ford aged 80, and you click on Ford, you could end up on a Ford car, where you might have been talking about Harrison Ford 1 minute, and then next minute you're searching for a Ford car. Or Rangers, you start looking at park rangers. And the editorial team are not comfortable with the story drifting off into a completely different direction. So they have asked us to look at ways of how we can deal with that. And pretty much the only way that we can deal with it is to either custom build it for them, of which they're not willing to pay for it, or we make it more intelligent. So we're actually targeting non-media now, things like sort of websites that are e-commerce websites, search databases, things like Wikipedia, that type of thing, library-based information where the content is just the content, not necessarily editorial content. So it's not dead and buried. They do like it. The media team can see the value in it, but we're in a challenge with the editorial team. So hopefully that answers that question. The modern way is to get products in front of our customers quickly and pivot when necessary. Just start up the approach when taken to this, that there are still no products for even shareholders to test. Don't agree. So Paris, in regards to products, people are asking for the shareholders to test the product, okay? It costs us a lot of money to run speech to text. We're currently, as I mentioned, paying £1,500 per month per channel for the use of Read the Radio. So if we leave Read the Radio running, it costs us £1,500 a month for every radio station that we use. So for somebody to go on it just to play with it actually costs us money, which we don't have to burn right now. So we are restricting them to people that are paying, for the fact that if they're paying us, they're covering our costs that we incur for running them. If we get the speech to text, our speech to text working adequately, and we're not that far away, we will then import our speech to text onto the Read the Radio, and then it will be fully open source for you to use whenever you wish, because then the cost will be much, much cheaper to us and it will run. With regards to TouchWord is there. We have passworded it because we actually are counting who's looking at it, because I've had a number of investors saying that they've actually looked at our demos and we don't believe they've even been into it. So we're passwording it so that we can actually make sure that we're present when they actually log into it. So again, for shareholders' purposes, I can assure you that we have a working demo of the Read the Radio. We have seconds away. You will have already seen it, but it has been passworded now and it's not a toy to play with. It is something that we're using for the commercial purposes. X3, it's impossible to demo it. It can demo it in a classroom. The speech to text we have fully operational. I can assure you I've seen it. Has all the board and we've seen it working. It's there. The AI security, if anybody's got any interested in that, I can point you in the right direction to look at, but I can assure you it is a market-leading technology that's fully patented, and we have attained the rights to sell it to the AI space. Now, one of the things that I forgot to mention earlier, one of the spaces that are going to be huge within the AI space is what's called Internet of Things. So think of Alexa in your front room. Alexa is using AI to basically answer things. Mainly it's listening to what you're saying and reporting back to Google, but your fridge that's going to tell you you need to restock, and your heating that you can control from your phone is all AI working on apps and various bits and pieces. You can hack into that very, very easily. We have a technology that's going to stop the ability for that to be done and get paid a substantial amount of money if we can invest it. So we are working with a world-leading company at what they do, and we have the rights, the sole rights to sell that in the AI space globally. So there's a product we can also sell. So if you'd like to understand more about that product, I can point you in the right directions as well. It was a time on the video. Can we get an independent valuation of the companies? Can we get an independent valuation of the companies? Yes, it's Ali. This is Ali's question. Can we get an independent valuation of the companies? We can. It's accountancy firms are available for doing it. At the moment, it's not really a case of us putting a value on it and hoping for the best. This is based upon provable investors, and I believe the EIS conversation is something that I'm explaining that hopefully explains where we get the valuation from. If you put it on product, there are specialist companies that could argue this through, but they would probably be in the levels of the likes of PwC and Deloitte, and they would charge us substantial amounts of money for doing so. I'm not adverse for somebody to do that, and I believe that we would stand up to the test, but it's quite an expensive project, and right now I wouldn't personally be willing to fund it from the company because we just don't have the money to waste. And it may seem like a blasé conversation by saying waste, but we really are having to count every pound in and out at the moment. And I understand the requirements to understand the value of the business, but we really don't have luxury money to spend. So I'm more than happy for anybody, and obviously, Ali, you pointed the question, to sit down with anyone and justify why I believe those values are based upon real revenue streams that we can generate in the next 6 to 9 months, that actually would give a hard value of £40 million, £40 million, not just based upon the EIS investment. So hopefully that answers that one. But again, Ali and anyone else that wishes to challenge that question, it's probably best for a one-on-one conversation where we can actually talk on that one. We're back to the demo. It was very functional. It was very functional, but it really wasn't going to work as a business, unfortunately. By firm of chartered accountants, again, yes, open to the suggestion, but it's a conversation. Is there still a copyright issue with speech to text as opposed to reading? Speech to text is not really a copyright issue. Our patents, this is Seth's question regarding copyright on speech to text as opposed to the direct reading of text. Our patents really cover us for the demonstration of the touch word and also the presentation of WASON as a search format. It's not really covering things like speech to text or the direct reading of text. It doesn't really cover that within our patents. And I don't believe that's something that's actually patented and enforceable. We certainly don't own the patents for it. Hopefully I'll answer Michael's question regarding the shareholding there. It's been thing. Yep, worked out with Gary West, not Gary Walton. Apologies for that, for confusion. You're doing this stream has been incredibly insightful. Oh, great. That's one compliment for doing it. It's very odd sitting here talking to people like this. I feel like a newsreader. Yep. Go around. Please send me regards to everyone, including Dylan Davis. In-house speech to text. I'm sorry, a bit lost on the question, but with the in-house speech to text, it is proprietary. We have built it from scratch. We do own it. I'm not sure there's a question there, but with the in-house speech to text, it's not something that's patented. We've not breached anyone's patents, but it is our own system that will belong to us. Thank you, Philip. Appreciate the kind words. When you merge two companies, the valuations must calculate the new share distribution. Back to the question of the pricing, Ali. It will be fully explained again, but the valuation is based upon real revenues that we believe we can generate and from where that money will come from. So probably better that we have an individual conversation between ourselves, but anyone that wishes to have a conversation regarding the valuations and how we've settled on them, I'm more than happy to do so. With regards to the current premises, which is a question from Gary West, we currently rent the premises in Spain. We had a long think about whether we needed it, whether we should keep it. Quite a substantial amount of money has been put into the equipment in there. We've got a lot of equipment in there, and we've got to store it and house it somewhere. Quite a lot of money has been put into the fit out. And realistically, thank you, Gary. Realistically, we would be throwing a lot of money down the drain by getting rid of the office. It is required for housing a lot of equipment that's now doing a lot of work within speech to text. We do have staff in there, and realistically, the rent that we pay is quite minimal. So it didn't make any logical sense to get rid of the office. We felt that we were doing it for the sake of it rather than for any decent business sense. So we will be keeping the office in Spain. In the future, we may be opening offices elsewhere. We may just to sort of clarify, once the company has merged, if we decide to merge the company, if everybody agrees to it, we will probably look to open an offshore entity called iStein also, of which in time the company in the UK will become 100% owned by the offshore entity, which will allow for tax benefits for anyone that isn't exposed to tax. And there's a number of ways that an offshore company, for even people that are exposed to tax, can mitigate their tax in the setting up of that process. Because when the company is set up, you choose never to take your shares, you choose to structure them in a way where they're more tax efficient for you, going forward, you may be able to mitigate any tax liability you may have if we are successful with regards to the sale. As he said, the merger makes sense. Superb. Glad you agree, Seth. I think that it makes perfect sense. We're paying just on accountancy fees alone. We have literally doubled up on fees for this, that, and the other. We're paying twice to get rebates on taxes. We're paying twice for everything, and it just doesn't make any logical sense. And it just makes us much more marketable. To go, we're an AI research company with some of the best AI products on the planet. We have the fastest learning AI on the planet. We have the fastest media sweeping thing that can literally pick up the spoken word on the radio or the television 6 seconds after it's broadcast and give it to you wherever you are on the planet instantly, is massively powerful. And ultimately we'll have AI built into it. We have TouchWord, which is the fastest way to search through a database without the inconvenience of actually having to retype and paste. We'll have a speech to text engine in probably within the next 6 months that is equally as efficient as Google's, which is the market leader out there right now. We have the number one, and I mean this, and you guys don't know too much about this one, but we have access to the number one cyber security database security system that we have the rights to sell this within the AI space, which is immense, absolutely immense in its own right. And then we have good products, not amazing products, but good products in Read the Radio, replacements of subtitles. Imagine this, just remind you of the figures. We will have somebody that is currently paying between £300,000 and £400,000 at £10 an hour for a person to be sat there 24 hours a day, manually typing as a program is being spoken. As a stenographer is going to be typing as the program's going. It's going to cost £300,000 to £400,000 for someone to be doing that 24 hours a day, 7 days a week for a year. We could do that with our speech to text and substantially reduce their costs and charge them for the process. So again, it's another product that we have to sell. So we have a story to tell that is going to be a lot easier to tell, and we're not abandoning the company if we happen to sell the product. So we walk away. Obviously, everybody wants to sell Waz on seconds away, and if we get $1 billion for it, we just go, thanks very much, there's a product, we sell it off and we carry on with the business. So you had a big windfall, and then you've still got your shares in a company that hopefully has 4 or 5 or 10 other things beavering away. Thank you. I think that's Lindsay L. Looper. I'm assuming it's that, Lindsay. Thank you for things. We're done even without a drink. You're right, Seth, it makes sense. Thank you for your information, presentation, really appreciated. I think that's the questions. So unless anyone else has got any more questions they'd like to add at this point, I will probably disappear. But hopefully you found it useful. I understand it's a bit weird and a bit odd, and it's a bit weird for me. I've never done this before. But it's a bit easier to try and explain it like this than to try and type this into one long letter. So we will give you documented information that relates to you specifically with regards to all the information that's been put out. We will give you the updated documents that we're proposing to put out to people that shows merged brands, with products that are named, with business cases that relate around them, with monetary figures that are in there that show multi-million-dollar ideas for pretty much all of them, and that will all be sent out to you in the next day or so because they're all prepared and done. So, all right. I'm sure stenographers won't be the first person replaced by machines. I went through Heathrow Airport the other day, and BA, by the end of next year, are planning to you to walk through the airport and never touch a human being from the minute you walk in to the minute you get on a plane. It's going that way. When can we all get a copy of this presentation? This, believe it or not, is being recorded. It's available for anyone to watch again at any given time you want. The link will be sent round. It's a private link that only people that have got the option to watch it, so you can watch it in again anytime. Please, can I remind you that this information given out on this is confidential for shareholders only. Obviously, this information is proprietary to the company and the shareholders of the company only. So any distribution of this information to anyone outside of that will breach any confidentiality agreement that is in your shareholders agreement. So there's my little caveat of please keep this to yourself, because we are obviously trying to develop a lot of proprietary information. But ultimately, it's there for you to listen to. It's there for the other shareholders to watch and listen to. Going forward, we'll be doing things like this in the future. There may be times where we record something and send it to you just to give you some announcements. We will be reporting on a quarterly basis as we promised. There may be updates in between, but as much as it may be frustrating that you want more information, right now we're trying to focus on getting this business working and doing what you want it to do, and reporting, believe it or not, as much as it may seem like it's a quick process, it takes time to do. And I can assure you we're all very, very busy with doing the things that we think are most important for the company. So as much as you may want to hear more, just be assured that there's things going on behind the scenes, and we will report to you within the quarterly basis. But if there's something important to tell you in between, we will do so. So we have honoured what we said we would do. We did report to you after the January meetings. We did report to you in March. Now June, we're reporting to you again. So we're sticking to the timeframes we said, and hopefully that information is getting more detailed and more concise. And we are asking your opinion on things that matter, like the merger. I appreciate there's a lot of information to take on board, and you may not always agree with everything we suggest and do. And I know there's still concerns, and how do you value a business at £40 million and everything else? But when you look at what we actually have, I believe 40 million is undervalued. It's substantially undervalued, but we have to work a way to join it together. And with the kickbacks that everyone's getting from the original founders, and with the way that we've uplifted it, I think everyone will see a very favourable position for where they stand. And when we're successful, when we sell these businesses, or we float the businesses, or whatever it is that we decide to do in the future that gets this to the point where there's an exit route, if you like, I hope that all of the work that's been done by everyone from the start to today, and all of the difficulties that have gone on, can all be put to the past, and we can all go out for a drink together, the whole lot of us, and celebrate what was a very good idea in the first place. So unless there's any other questions, I'll probably leave it there. Just looking to see if I've got any more questions that have popped up. So there you go. That's me for the day. This is your newsreader reporting in from iStein, was on what was, and all the things that go with it. So thanks for your time, everybody that was on board, and thank you very much. Appreciate the kind words. Just remember that everyone that's involved in this business, and this goes for the guys that aren't day to day involved in this business. There's no shareholder in this business that doesn't want this to work. No one. And everybody, and I can assure you, everybody, even despite all of the difficulties of the past, everyone is pulling in the same direction. And the more we do that, and that's hence why I asked for the appeal to help, if everybody pulls in the same direction, we'll get this to where it's supposed to be, because we have some great stuff to work with. I believed that when I got involved in the company. I still believe that now. We've got some very, very clever people involved in this, and we've got some very good businessmen involved in this. And I believe that this will be a success in the not too distant future. So hopefully, unless you've got any other questions, I'm going to disappear at this point, because I feel like a bit of an idiot sitting here talking to myself. But appreciate all the kind words, and hopefully this was some use. Have a good evening. Take care. Good night.